Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, is there a parallel with the shape of the stock markets right now and what happened to the oil industry in the big crash, where everybody in the industry was still treating it like it was a going concern? They were still buying very expensive pickup trucks and recreational vehicles, and then one day the repo man showed up and took it all away. Is that going to happen to the stock markets? Everybody's going on like it's healthy and a great indicator. Could this thing all of a sudden collapse and have the margin clerks hard at work taking away your wealth?
You know, I think that is a great analogy, and in fact, you know, I had talked to a family member who was in the oil business, and yeah, I think that's a great analogy. I had a friend telling me, or a relative telling me, you know, let's go back to 2008 when oil, you know, went to what, 147 a barrel, something like that. And everybody was talking about peak oil, and we had, you know, the boom in commodities. And then, all of a sudden it turned down. Oil went to $32 a barrel. You know, for the record, you know, I called that top in oil, the week after the tip top, you know, on the air. Clearly, I mean, that was an easy call based on some statistics and that sort of thing. And it was right. But that said, you know, equities had also peaked in 2007. Everything went down together in 2000, late 8, early 9. And then oil, it rebounded, it went back to $114, and then just kind of oscillated between 75 and 100 or so. And it never was, you know, oil and commodities in general never did get the reinflation that we've seen in equities. Well, during that time, when oil rebound, to your analogy, you know, I have one that's similar. I was talking to my nephew, and you know, he works in that business as well, and he was telling me how, you know, with that rebound, everybody thought everything was okay. They didn't understand what had happened. They didn't understand that cycle had rolled over, that the bust had really come. And, you know, in 2010, 11, 12, while prices were oscillating up there around that $100 mark, everything was fine. They were fat and happy. They were paying great. They were building rigs. They were drilling. They were rocking and rolling. And, you know, there was guys out there making more money than they'd ever made before. I mean, great money. That they didn't realize that it was a facade. It was a rebound. It wasn't real. And then he said come 2014 or so, it just changed. You know, and then oil prices collapsed. And now these guys are doing good to have a job. You know, it's the polar opposite. And I was looking at some of the oil related stocks, and you know, some of those stocks that were $300, I made some notes here, $300 back in 2008 are now at $4. Another one was 127s down to 22. There's one that was $11,600 and change. It's now at $1.85. I mean, that's the kind of bust that we had, and they didn't realize it because of that rebound. Well, yes, I think that is a great analogy as to what's going on here with equities. Like I said, equities have been, you know, the holdout. You know, I know that it's taken forever. You know, back then it took, you know, 4, 5, 6 years before they realized what was going on with oil, was kind of the same thing here, except on a grander scale. You know, we've seen the reinflation of equities. We've seen it push to the high that back in January of 18. And since then, it's been, you know, it's just been back and forth and back and forth. There's been this oscillation, and everybody thinks that everything's okay. And everybody thought that everything was okay with the reinflation into that 2018 high. But it's not. It's a facade. It's not real. And when I say it's not real, I mean, to turn on your TV, look at the headlines on your internet news, whatever your source is. I mean, we know that it was pumped, manipulated, inflated, cut interest rates, QE. You know, it's not legit. That's what I'm trying to say. It's a freaking bubble. And nobody realizes it's the same thing. It's the same thing. And I think that we're ultimately going to see the same kind of washout that, like I said, that we saw in oil.
So, what kind of message or lesson can we learn from this?
Well, I think the message is, it's like when I was talking to my nephew, I said, think about this. I said, imagine if in 2010 or 11 or 12 or 13, you had told someone that, hey, this is over. What you're experiencing here is not real. This is coming to a crashing end. This is done. Your stock is going from $11,000 to $1.85. They would have said, you're nuts. They wouldn't have believed it. It's the same thing. You look at this data, it is telling us clearly, and it has been telling us clearly, that there is the deflationary forces have rolled. The sixth economic cycle since 1800 is rolling over. And they're doing everything they can, which I understand, because who wants to see this kind of carnage? They're doing everything they can to try to hold it, to try to bridge the gap, as they say. And in the process, they've made it an even worse bubble. How long does it go on? I don't know. But it's trying to set up. And since the January 2018 top, we've seen 4 oscillations now above and below that level. This time, it's a little more dicey. You know, we've come back below that level. And, you know, I said, coming out of the December low, I said it's a matter of, at the December low, I basically said that it had broken. But it's a matter of how well it can be contained. And that's where we're at. It's containment. How well can they manage and contain this? Well, so far they've done a marvelous job at keeping this together. But it's getting increasingly difficult to do so, and you can see it in the charts. So I don't know exactly. The structure will tell us, and that's something that I'm monitoring in the newsletter and my updates and stuff. But the cracks are there. We're seeing the leaders, just like we saw some of the structural leaders back in 2018 lead at that top. And when I say that top, throughout 2018, as equities made their last push into their October high, there were structural leaders, leading economic indicators, there's things telling us that was a push into the top and that it was a downturn coming. And we're now seeing those things again. So is this it? I don't know, but it's the opportunity. And so the risk is far, far greater, I think, than people realize. And then once we get another Dow theory, bearish trend change, once we see some hard cyclical structure in place, then absolutely the risk is going to be extremely high.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway.
Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, we saw the Dow Jones have a tremendous plunge earlier this week. It's still not looking all that healthy. Is this the kind of symptom you were looking for?
It's one of, yes. I think it's, like I said, we've got some intermediate degree tops in place, and I think we're going down into some higher degree cycle lows by the end of the year. Is there enough damage done to really break the back of it? I don't know. That's the test. Is that potential there? Absolutely. So, you have to measure it. Like I said, they've done a masterful job at containing it. And the question is, can this be contained with this particular setup and downturn into these cycles? I don't know. Nobody knows. They don't know. I mean, certainly there's going to be efforts to try to contain it, but at some point they will fail, and then gravity's going to take hold. And another point, kind of not to digress too much, but I remember one time back in 2000. I guess it was 2000. I know exactly when it was. It was October of 2009. I was at the New Orleans Investor Conference and speaking there, and I actually had a PowerPoint presentation that I gave explaining the setup that was in place at that time. I said 9. It was 2007, excuse me. Explaining the setup that was in place at that time. And I was, it's kind of uncanny, looking back at it, because, the structural opportunity for the market to crack, just like now, was in place then. And I gave that presentation and explained it, laid it all out to, the people that attended that session. And getting in an elevator, there was a lady, she didn't see I don't guess she saw the thing. Maybe it was before. I think it may have been before that actual session. And she made the comment, she said that she wished she had been privy to the information in 2000 when I talked about the setup with that top. And I thought to myself, that top was, or that setup occurred 18 months before the break really occurred. The market just kind of flatlined, much like now. And I thought to myself then, I said, even if you had that information, you probably wouldn't have listened. And just like I gave the presentation in 2007 and said pretty much got it right as far as what was going to happen with the setup. And it said that, the efforts to extend that cycle up, blow it up into that 2007 top had only made matters worse, and that proved to be correct, and very few listened. And just like I said, had you gone back in 2012, let's say, and told people what was going to happen with the oil field industry, no one would have listened. And on that point, let me say this. This is another real-time example. I was in a neighborhood. We just moved. I was in a neighborhood. There's a builder in there in 2005. He was a real cocky guy. And I remember I was watching housing, and I was on Financial Sense at the time, and I told, was doing some charts and some research on housing, and it made the call on housing. It had broke. It's just a matter of the cycles. It doesn't matter what the security is. I mean, the structural indications are all the same. And I could tell from the environment that I'm in, where I live, that housing was, things were abnormal. And then I saw the setup the structural setup. And I told this builder, I said, well, yeah, what was going on with housing? I said, this thing's about to pop. And being the smart aleck that he was, he said, what the hell you know about housing? I said, I don't know anything about housing, but I can read a chart. Well, 3 years later, he was bankrupt. So all these are examples of, I realize that we've been talking about this bubble top forever. I realize that I'm not the only one probably that you have on that's been talking about it. But it doesn't change the fact that what we're seeing and where we are. In 2000, like I said, that top hung on for about 18 months. In 2007, the setup came, and bada bing, bada boom, it broke. And in 2015, we got a little set up, but nothing really ever came of it. It just, it reinflated. But here, we've been sideways now since January of 2018, and we continue to see an erosion with these leaders, with the deflationary forces, and I don't know, when maybe the crack comes next week. Maybe it can contain it another year. I don't know, but I know the environment we're in, and the structure's going to tell us, and we're going to look back on this, and it's going to be just like all the other examples, and no one listens. It's always the case.
We'll have more with Tim Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cycles Van Wood. Well, Tim, you talked about the analogies with oil. What do you see happening with crude?
Lower. I think it goes lower. It's been beaten so bad. How low does it go? I don't know, but lower. And the reason I say that, I'll qualify it. The research, raw material prices, like I said, are rolling over. And it's a historical fact that crude oil is not a component, by the way, of the raw materials data that I track. But yet it moves to a very similar pattern. And with the raw materials data continuing to collapse is a pretty good word. It remains extremely weak, making new lows week after week after week. Crude oil's subject to follow. I mean, that's a historical fact. So I think that it's going lower. The same thing with gold. You look at the historical relationship. I think what we've seen is an abnormality with gold, because it also tracks raw materials. This raw materials data is key. It's telling us that the deflationary forces are at hand. And, nobody realizes or wants to believe or thinks this time is different or whatever the case may be. But it's all going to play catch up.
Gold, so many people are saying if the stock market tanks, gold will be the safe haven. Will it?
That's not in the cards that I see at this time. Like I said, because of the raw materials data, and it wasn't the safe haven in 2008. It came down with everything else, and I really think that when the liquidation begins, we see it's going to be broad based. The real test for gold, I explained, before, and I guess it's worth saying again because it is important. A lot of people follow it, obviously. But with gold, the raw materials index, the CRB index, and then if you look at some of the gold stock indexes like the XAU and HUI, I mean, they all move together. And if you have gold going up and the HUI and the XAU not confirming it, and when I say not confirming it, yes, they went up, no question about it. They went up. But they did not confirm structurally. In other words, they didn't move above the previous highs of certain degrees, and I got into that in the research letter kind of deep, but they didn't confirm structurally. Let's just leave it at that. And there's no time in history this far into a 9-year cycle, which the 9-year cycle, bottomed back in late 15, early 16. So there's no time this far into a cycle where the gold stocks haven't confirmed gold. So that's a red flag. It's a non-confirmation, if you will. So that's a problem. And then you have the non-confirmation with, like I said, raw materials and the CRB. Well, if there's a historical relationship where, 90% of the time, or hell, I think 100% of the time, I'm not looking at the charts. I'm saying from fuzzy memory, but the correlation is strong where the relationship, it's there. They move together, and all of a sudden, this other stuff is not confirming and it's moving lower, and gold is the one that's outperforming. Well, you have to look at that as it being the abnormality. What's the odds of it being right and everything else being wrong, given this long, historical relationship? So I stand on that. That I think gold is the odd one out. But with that said, we're moving into some intermediate degree lows in gold. And if this time is different, then the real test is going to come as we turn up out of these next intermediate degree lows. And what happens with the structure of that cycle is going to tell the real tale.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood. You can find his articles on cyclesman.com. If you have any questions for Tim, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.